Let me know when you're ready.
I was just looking to see when exactly the time is. It reminded me that I heard that the CBC is no longer going to be carrying the National Research Council's 2 o'clock time signal. Yeah, because everyone's on the cell network now, and we sort of all have the same time.
You know, the clocks set themselves now, eh?
Yeah, exactly.
Uh,
I have one that doesn't have battery backup, and so when there's a power bump or outage, it's a microwave, right? And it just makes me furious that this device doesn't take care of itself.
Okay.
We're all
All
set.
meeting
Yeah.
minutes? Good. Motion to approve the agenda. Tim, seconder,
Second.
moved and seconded that the agenda be approved as circulated. Question, all in favor?
Aye.
Motion carried. Conflict of interest declaration, any? None, thank you. Move on to 4, staff report, post-closure review, 3rd quarter.
Thank you, Mr. Chair. Included in your packages are our standard report with respect to how the post-closure fund has performed during the quarter. And we begin by making sure that that the allocation, that we have the right amount of money in equities and fixed income investments that the board has previously approved in its investment policy statement. And that is the case, continues to be the case. There's not much change in this quarter from the previous quarter, and that's largely a function of what is our buy and hold strategy. If we go to page 2 in that report, we have the 3rd quarter data, which shows that the fund in terms of value was down $124,000 in the quarter, and which is a negative return of 2.3% for the quarter. When we look at that, we should bear in mind that for the year to date, the fund is actually up in value 5.26%. And I'll remind the members that our target return is 4.84%. So notwithstanding the disappointing 3rd quarter, we still are exceeding our target. The majority of the negative growth that happened during the quarter happened in the last week or 10 days of September. Prior to that, you know, the quarter was shaping up pretty well. An interesting fact that you might want to be aware of is that since 1928, September has been the worst month for stock markets. 52 times the market closed down in September as compared to 42 times when it went up. And of all the 12 months, that's the worst ratio. I can't explain why that is. I've never seen a study of that. I don't think it has anything to do with the fact that my birthday's in September, but we experienced what I'll call a typical 3rd quarter. Looking forward, there's uncertainty with respect to interest rates. There are constituencies that are looking for rates to level off and begin a slow decline. The Bank of Canada is making an announcement today. I haven't heard it yet, but central bankers throughout the world are, you know, they're battling inflation. So I think we can anticipate continued volatility as we go. And from a historic perspective, that's our report. We don't think that from the staff perspective that we need to take any kind of change in our investment policy statement or our strategy and at this time. So I guess from here, I would invite our fund managers from Scotia McLeod to sort of comment on their outlook is for the next quarter before we take questions from members. So, Colin, maybe you could give us some input in that regard.
Actually, Don, can you hear me? It's Tony. I actually couldn't get on the computer. I had
Okay.
to dial in. Yeah.
All right, welcome.
Yep. I was planning on doing it. It's just you can't see me. But anyway, I did catch kind of the last 3 quarters of your recap and appreciate you kind of giving kind of the recap. Like you said, year to date, we're up 5.2% or 5.26%. And again, last quarter kind of kicked us a bit. The first 2 quarters, first quarter, we were up 5.84, second quarter, 1.84. We're hoping that, the last quarter of the year here is going to give us maybe the boost that we need. Really, even over the last quarter, Canadian equities were a little harder hit than the U.S. side. And that's because, on the Canadian side, a lot of the companies that we have in the kind of the index are very interest sensitive. And, that being the banks, BCE, Enbridge, Emera. And these are all held in the portfolio. And as rates went up, these really took, a bigger hit than what we're used to. And what we're seeing, is, maybe a magnification of hopefully, something that'll turn around and go back the opposite way. As a matter of fact, if you look, at a couple of the banks, in particular, the Bank of Nova Scotia, it's sitting right now with a dividend of 7.57%. That is a crazy yield. Bank of Commerce is 7.29. Their prices, Bank of Nova Scotia down around $56. Now that compares to interest rates that are 5.25%, 5.5%. And so, that risk-free money compared to the risk of kind of buying a bank stock and picking up that kind of a yield, that's why we've seen kind of the Canadian market, in particular Canadian market, but also the U.S. But we've seen the kind of the blue chip stocks down where we really haven't seen them before. So the opportunity for growth going forward on these type of investments is very strong. And what we really got to see, which we hope to see going forward, is that the indicators are showing us that inflation is kind of coming down. It's not to that 2% that everybody wants to see, but the last number that I saw was somewhere around 3.8. And so what we're seeing is it's working. And at some point, actually, just this morning, Bank of Canada decided to hold a key interest rate of 5%. So that's a good indication that maybe we've topped out. And we will start to see rates drop as things get tighter. And kind of the indicators, even what we're seeing, in kind of wages, continued kind of price increase in food prices. They're lagging kind of really the reaction to the inflation that maybe is under control. And part of the reason is, especially with the grocery stores, you see them in the news a lot, they're trying to kind of say, okay, drop prices, and they're not dropping. And then what they're doing is just holding them and hoping that, it does catch up on the other side. So, we will see this kind of turn around and start back down. The biggest one too, that I think is, a major factor is kind of this refinancing kind of magnitude or the mortgages, that are coming up for renewal. As they renew, they're coming in, from like 2%, 2.25%, maybe even a little lower, somewhere around 5.5%, 6%. And that, is hurting a lot of people. And so there is no place really for interest rates to go but down. And as we see that happen, the portfolio that we have, while heavily weighted in stocks, there is approximately 20% in bonds or fixed income. And as interest rates come down, we will see that appreciate. But the 80% that we have in stock, that will appreciate and kind of bring us back to where we're used to, which is really strong performance for the risk we take in having it in the equities or in the stock market. So, we are very much feeling going forward, that the worst is over and over the next quarter, next 2-3 quarters, we'll start to see that in not only interest rates or, the bond side of the portfolio kind of appreciating, but also on the equity side. So, we're very positive on things, to be up even for the year to date at 5.26%. That's a good number. It's not like what we're used to, but at the same time, we've just gone through 20 months of probably the worst markets I've seen, at least lengthwise even. And I've been around here for like 30 years plus. It's a long time and it's a grind, and, not just for this portfolio, but for your own portfolio. When you look at it and you see it down for that length of time, it's pretty hard to kind of digest it and kind of say, okay, let's step to the market and add more money in there, especially when you can find and see GIC rates are, like I say, around 5%. So as things kind of turn around and start back, we're very positive that we will see this, kind of move forward and a little stronger growth. Don't get me wrong, I like to see 5% for what we've been through, but with this type of exposure to the stock, we should be up there around the 10% plus mark. And as it is long term, very appropriately, allocated. And as you indicated, Don, not looking to change. We are in for the long haul, and perfectly kind of okay with what's going on. So, that's kind of it in a nutshell. Happy to kind of answer any questions if we can, if anybody has them. But overall, portfolio is well allocated, to be positive after, what we've been through. Feel good about it, and open for questions.
Okay,
Thank you, Tony.
anyone have questions for Don, Tony, or maybe Colin, I guess?
Mr. Chair, I'd like to ask a question on, so the Canadian bank interest rate held, I understand, did the US hold as well?
That I don't think was being looked at today, Colin. Maybe you can correct me if I'm wrong, but it was just Bank of Canada that was setting theirs today, and they held.
Yeah,
I
I
do
was just
think,
Bank of Canada. I think it is a week lag on the US, so I think it's next Wednesday. Don't hold me to it, but it always they never raise or hold on the same day. They're always offset.
No, for sure.
And what is what is your split US to Canadian? Do you have it?
Hey, just 1 second here.
I guess the reason I'm asking, I understand that the US is hedging hard to increase again. So
Pardon
that's
me?
the only reason I'm asking.
I'm sorry, I didn't catch what you were saying.
I said I understand that the US is hedging to increase, and that's why I'm asking if Canadian held, it's.
I know, even as early as last week, the Canadian side, we're not anticipating, but it was more of a potential increase than even holding. And so, every day, they're looking at this. So, I don't think that you would see, or we can make a call on it for next week. But at the same time, when we are making decisions on whether it's US or on the Canadian side, it's not for an anticipation of something's going to happen in a week's time. Although that plays a factor, don't get me wrong, it's more of a long-term decision that we're making. And right now, the portfolio, is actually, a little stronger on the Canadian side than the US side. But, again, not making a bet saying, okay, let's go US only versus Canadian, or Canadian only versus US. So, I don't have the exact split, but it's not a secret. We can definitely provide it. But again, it's something that, while we do look and anticipate things that are going on in the future, it's not something that we try to call and make, decisions on that kind of a short term of a basis.
Okay.
Mr. Chair, am I?
Yes.
Tony's captured that very well. The one thing I would add is that with an investment horizon of 20 years plus, it's not been our practice to, try and, that's the reason why we haven't played the interest rate game or the geographic diversification. We're more a buy and hold approach. And over the long term, our anticipation is that those events will moderate and factor out over a period of 20 years.
Any other questions? Okay. Don, thank you very much. We'll move on to the third quarter operating results. Mary Kay?
Thanks, guys.
Yeah, see ya.
And I think Kelly's just gonna share the screen.
There she goes.
Awesome.
Just a quick note here, Don and I had this discussion this morning because I think at the last meeting that I chaired, I was looking for motions on each item in the agenda. And since we're really not making decisions, but we're making developing consensus and recommendations, we'll just move through each one and accept questions.
Perfect. All right, thank you, Mr. Chair. Kelly, if you don't mind just jumping to the balance sheet a couple pages down. So this is the assets and liabilities and equity that the commission had as of September 30th, which represents the last of the third quarter for 2023. So cash was down by about 107,000 at the end of September. Accounts receivable up about 165, and prepaid expenses were down 344,000. These are all in the normal course of operations. For prepaid expenses, we will pay an invoice, and sometimes it's for an entire year. So we go about expensing it on a monthly basis. So that's what causes the changes in prepaids. So total current assets at the end of September were 5,798,000. For non-current assets, we had 21,160,000, and the changes there from the previous month are just investment and interest income. So that gave us total assets that were down slightly from August to a balance at the end of September of 26,959,000. On the liability side, we had current liabilities of 2,365,000. The big fluctuation there is deferred revenue. And the way that works is we bill the member communities on a quarterly basis, and we recognize revenue on a monthly basis. So you will see at the beginning of a quarter, our deferred revenue go up quite a bit and then slowly come down as the quarter passes and the revenue is recognized. So that's why you're seeing the decrease of 553,000 there. And the same goes for accrued debt servicing. We recognize an expense every month and we only pay those amounts semi-annually. So it will increase, and then when the amounts are paid, usually in May, June, and then November, December, you're going to see a decrease in that accrued debt servicing. For long-term liabilities, those stayed pretty constant for a balance at the end of September of 9,050,000. On the equity side, we had investment in capital assets, which is our unencumbered capital assets, 10.7 million. We had our balance in the capital reserve of 2.1 million, operating reserve of 429,000. The majority of those funds are invested in GICs, and they accrue interest. And then we have our accumulated surplus of 2.249 million at the end of September. So total equity was 15.5 million, giving liabilities and equity of 26,959,000. On to the next page, we get into our statement of income. And this is broken down by each service that we provide. So starting with regional planning services at the top there. We had a surplus for regional planning services, and it's the fifth column over, might be a little hard to see on the screen. So the surplus for the first three quarters was $6,662. That's about $4,000 under what we had projected in our budget. And if you jump up to expenses, you'll see the main cause of that is our corporate service expense allocation. So those corporate service expenses that benefit the entire commission and are allocated out to the various divisions to pay, those are running over budget for 2023. So that's affecting a lot of the individual funds, but overall still positive. So no concerns with regard to regional planning. And you will see that revenue and expenses are both operating at higher than what we had budgeted. And that relates to the work that we're doing on the regional pool. But we have money that's covering that, so there's no net impact to the commission on that. The next fund you'll see is the local planning services. So for local planning, for the first 3 quarters, we had a surplus of $158,000. That's $170,000 higher than what we had budgeted for the same time period. Jumping up, you can see our revenue was pretty close to budget, within $1,500, but we're having some savings on the expense side. And you can see that comes really from the operating expenses. And when you drill down even further, $134,000 of those savings is coming in salaries and benefits. The reason being, we did have a number of positions during the year that were not filled. They have since been filled. So we're going to see the favorable variance start to decrease slightly, but we're gonna be able to be in a surplus position that's very healthy come the end of the year. So the next page covers the solid waste services. And about halfway down that page, you can see landfill surplus. So landfill had a surplus to the end of September of $2,046,000. That is $1.4 million higher than what we had budgeted for the same time period. And you can see if you jump up and you look at the last column, our revenue is $738,000 higher than what we had budgeted. And our expenses are $729,000 lower than what we had budgeted. So that's what's driving that large surplus. On the revenue side, our garbage tonnage is about 3,800 tons over what we had budgeted for the same time period. We expect to be about 85,000 tons for the year, which is consistent with what we have budgeted for 2024. So we're getting higher tonnage, it's giving us higher revenue. And then on the other landfill revenue side, you can see there's a favorable variance of $420,000. And that's being driven by Elm Tree, which is our tenant on the landfill. When they bring in soil to remediate, we charge a tipping fee on that. So that revenue is about $259,000 higher than what was budgeted. And that really just depends, that fluctuates year to year. Sometimes they have a lot of projects, sometimes less. But this year is a good year with regard to that. Our interest income is also up. We're benefiting from higher interest rates, about $81,000 over budget. And creosote timbers, that's tonnage that we receive, is about $88,000 over what we had budgeted. On the expense side of things, you can see that we do have some favorable variances in operating expenses. Again, salaries and benefits at the landfill have been under budget. So we're seeing a favorable variance there of $214,000. And then we have a temporary variance for our baling facility. So every year we do a baler refit. And usually it's done earlier in the year. But this year it's going to be done November, December. So about $171,000 of that variance I expect to disappear closer to the end of December as that work is done. We do have the favorable variance in post-closing costs because of the EIA and the extension of the life of the landfill. And then there's a favorable variance in capital expenditures of $154,000, but we do have a few projects that are outstanding that will probably reduce that before the end of the year. For recycling had a deficit, which we would expect, of $726,000. It's actually almost $68,000 better off than what we had budgeted, which is good news. Jumping up, you can see revenue was pretty close to budget. We're within $3,000. And recycling expenses are under budget. And again, that's salaries and benefits. I think across the organization, we have had difficulty filling some of these open positions that need to be filled. So that's what's contributing to that favorable variance in the operating expenses. So adding the surplus from the landfill to offset the deficit from recycling, that leaves a surplus in the solid waste division of $1,320,000. Onto the next page, you come to the power generation fund. And again, halfway down the page, you can see power generation had a surplus to the end of September of $68,000. And that's outperforming the budget for the same time period by almost $120,000. And you can see when you jump up that is directly related to additional revenue that's being generated. So that's great news with regard to the power generation facility. We do have one new engine that was put in last year, and we have another one that should be completed probably by the end of this year, early next year. So we'll have two new engines, which means lower repairs and maintenance costs, and gas flow is good. So good news all around with regard to power generation. Halfway down the page, you'll see Regional Tourism Promotion Fund. And we've talked about this one quite a bit in previous meetings, because regional tourism as well as economic development, we are seeing small deficits with regard to these funds. And the reason for that is it was a bare bones budget in 2023, and we're seeing that corporate service expense allocation being over. So that's what's generating those small surpluses. So it's just under 3,000 for regional tourism, and it's just under 4,000 for economic development. So I expect those deficits will probably continue to the end of December. So the next page shows the economic development, which we talked about. The only other thing I want to point out is you are seeing variances in revenue and expenses, but they offset each other. That has to do with the workforce development companion agreement that we signed. So we receive money from ESIC, and it goes right to Ignite for those services that they are providing. Community development, again, we're getting funding for that from the province as well. So that's why you're seeing for September, there's no surplus or deficit. We're using that funding to pay for the expenses in the month. So overall, we have a surplus in community development of $21,702. And then the last page has regional transportation services. To the end of September, regional transportation services had a surplus of a little over 93,000. And that all relates to expenses being under budget. So this service really hasn't got up and running just yet. So we're not seeing the expenses that we had originally included in the 2023 budget. Similar with regard to public safety, we have a surplus of 1,821. And we're seeing that's being driven by savings on the operating expense side. And then lastly, sport, recreation, and cultural infrastructure has a surplus of just under 15,000, and nothing has been spent to date on operating expenses with regard to that fund. So overall, when we add up all the surpluses and deficits up, we have a consolidated surplus to the end of September of 1,679,000. Keeping in mind that about 92% of this surplus is in planning development, solid waste services, and power generation. So overall, each fund is outperforming its budget with the exception of regional tourism and economic development. I do expect those funds to be in a similar position at year end. And the ideal goal is for us to produce small surpluses in each fund, because then that allows us to bring those surpluses forward in our second previous year budgets. So anything that's from 2023 is going to come in or be charged against 2025's budget when we do that. And I would be happy to take any questions.
Any questions for Mary Kay? Thank you very much. Seems like they're mute on that today. So we'll move on to the staff report, tenders. Right.
Thank you, Mr. Chair. Just had to double check to make sure I'm not on mute. So we've got a number of staff reports. The first deals with a tender package that was issued by the Solid Waste Division on September 13th. The tender in this case was for the installation of a feeder chain on our garbage baler system. The two responses were received. Tender call specifies that we award the tender no later than December 3rd, 2023. And the background of this, this project, of course, was approved during our budget last year. The costs associated with the project were split into two tenders, one for the materials that were going to be used in the repair work, the second for installation that would need to be performed. The material tender was awarded during the board meeting held on March 7th, 2023. And the total net cost of that tender was $265,926.75. The total amount budgeted for the two tenders combined was $500,000. So you can see that we had some approximately $250,000 to play with as a remainder. Now, when purchasing equipment, we typically have a fairly complicated matrix that we use to determine not only the purchase price, but also the lowest price of or cost of ownership throughout the life of the machine. However, when we talk about simply buying materials or contracting for work to be done, we simply look at the bidder's price and their ability to meet the specifications identified in the tender package. So relatively straightforward evaluation. In this case, the lowest bid was submitted by a company called XL Plating and Machining. Their bid was $183,281.25. And it was determined through an engineer's review that they have all of the necessary experience with the work that would need to be performed. I should also note that the landfill does not pay full HST, so we don't pay 15%. The tax that we pay at the landfill is 4.285%, meaning the net cost to us of the XL Plating and Machining bid is $191,134.85. And by way of comparison, that the engineer's estimate in this case for this part of the project was $250,000. So we're confident it represents good value for money. Big picture on the total project, total net cost of the project, again, was estimated to be approximately $500,000. When we combine the two tender values, we get a total of $457,061.60. And that represents an amount below budget of $42,938.40. Now, in the staff report, I should note, it was worded as though there's a motion required from the committee. The actual staff recommendation, and this differs from what's noted in the report, is that the committee forward the following motion to the board for its consideration, and the motion itself is included within the package. What we're looking for is consensus amongst the committee to forward that on to the board for consideration. That's all I have, Mr. Chair. Happy to answer any questions.
Any questions for Brad on this particular item? Okay, we'll move on to the staff report, signing and spending authorities. Or who's on second?
Yeah, thanks, Mr. Chair. In this case, we've got two very similar and very much related staff reports, both dealing with the same issue. The first on purchasing authorities. The current spending authorities do not reflect the chief operating officer's position, and they do include the general manager of solid waste positions. Now, both of those positions were addressed during a HR structural review that was carried out earlier in the year. And therefore, the authorizations that we have require updating. So as way of background on this, the current purchasing authorities were approved by the previous board on December 6, 2022. And I won't read the full resolution that was passed, but the crux of it is that it does not take into account the position of the chief operating officer, and it does include the general manager's position. Now, as far as discussion goes, the position of chief operating officer, the COO for the Capital Region Service Commission, was established as a result of the HR structural review. And the position of the general manager of solid waste was eliminated as part of that same review. The purchasing authorities have to reflect the new organizational structure in order to reflect, I guess, facilitate seamless operations of the organization. They're therefore required to be updated. Now, it does make sense. The second highest ranking staff position within our organization is the COO. And it would therefore be appropriate that the purchasing authority, the COO, should be less than the CEO and higher than the executive director. It's therefore staff's recommendation that the committee forward the motion or the resolution that's been included in the staff report to the board for its consideration. And again, it's simply it's a housekeeping item to reflect the existing organizational structure. Mr. Chair.
Any questions for Brad on this? Some bad up. Okay.
The second staff report, Mr. Chair, again, it's the same issue, only in this case it deals with signing authorities. I won't go through it in the same level of detail as I just did, but again, signing authorities are required to be updated to reflect the existing organizational structure. So that would include the inclusion of the COO in signing authorities and the elimination of the general manager of solid waste division in those same authorities. There was a previous resolution that was passed back in December 6, 2022. That was in the same meeting as we passed the signing authorities resolution. And again, a housekeeping item where we a new resolution must be passed. A draft resolution has been included in this report, and staff would recommend that the Finance Committee forward that onto the board for review in the next board meeting. Happy to answer questions on that as well, Mr. Chair.
Questions on the signing authorities? Consensus on that, okay. And we move on to the Faro contract, general discussion.
Mr. Chair, I thought staff wanted to bring this to the Finance Committee's attention, and as we're all aware, I'm sure we've dealt with it off and on. It's been a busy year, but one of the items that's consumed some of our time has been the implementation of the province's new recycling program, PPP, which is an extended producer responsibility funded recycling initiative within the province. Part of that, the idea behind PPP, of course, was essentially to shift the costs associated with recycling away from municipalities and the RSCs and shift that over to the consumers and indirectly, but ultimately it's being paid for by the producers of the same packaging. So in our particular region, all of the communities, all of the municipalities and the RSC have opted out of the offers that were made by Circular Materials. And what that means is we're on the hook for the costs associated with our existing recycling programs until May 1st of 2024. Now, the issue that we wanted to raise with the committee, and this is an information piece, is that our existing collection contract is with Faro. The commission itself, Capital Region Service Commission, administers that contract on behalf of the entire region, with the exception of the City of Fredericton, who administers their own, Village of New Maryland administers their own, and Oromocto looks after their own collection. But for everyone else within our region, the Capital Region Service Commission has administered that contract since 2004. The existing contract that we hold with Faro expires on November 1st, 2023. We have no more options to extend that contract. We've exercised our two options to extend by an additional 1-year term. So again, it ends on November 1st, 2023. So how do we bridge that gap between November 1st, 2023 and May 1st, 2024? What we've decided to do, we're going to go forward with a month-to-month extension on that. It doesn't make sense to re-tender. One of these tenders involves significant capital costs. To give you an idea of a typical tender term on this program, we usually do it for 5 years with 2 additional 1-year extensions, so a total of 7. That gives the bidders an opportunity to amortize their capital investment over that same period and pay for the investment that's required to complete this kind of a work. You can't expect a competitive bidding contract to result from a six-month tender period. So the best way to go forward is to extend on a month-to-month basis. Faro has been great to work with on this. They've agreed to extend on a month-to-month until May 1st, but they'd require a 4% inflationary increase, which I think is entirely reasonable given the changes in fuel pricing and capital costs. To give you an idea on these collection vehicles, they're specialized. They require about 15 months lead time to order. So we've been fortunate that they've been so easy to work with, and we wanted to advise the committee that that's the way we were going to go forward and ensure that our residents within the region didn't experience any service interruptions when it came to recycling collection. And I'd be happy to answer any questions on that as well, Mr. Chair.
I have a couple, but I'll wait until anyone else would like to. Any questions? Yes.
How would the 4% increase be transferred on to the municipalities?
Sure. So there are a few moving parts here, really two key moving parts. And Mary Kay, you can probably explain the details of how exactly that's passed on, how we've done that calculation. I'm sorry I put you on the spot, Mary Kay. The only other thing I would say, there are a couple variables that go on. So built into that contract, Mayor Nicklin, we have a fuel cost escalator clause. So it's based on New York Clearport fuel pricing, and it applies to, I believe, 10% of the contract cost. So the fuel cost volatility always factors into the cost that is eventually invoiced back to the various communities. As far as how that total cost of the contract is split up and billed back to the communities, Mary Kay, you can probably explain that a little better than I can.
Yeah, so it's based on your share of the tax base.
There you go.
So whatever your share of the tax base is, that is how we allocate out what the total contract would be.
Anyone else? So Brett, in our case, we have another anomaly, and that's Manor Sutton. And we still manage that, or we don't, the LSD does. And so we're in a situation there that if we wish to continue recycling services after the end of January, because that's when their contract ends, they're going to bill us for January no matter what. Then we have to strike a new contract with an existing hauler, because we have a unique model in that area, the Blue Bin, which you're well aware of.
Mm-hmm.
Being a user, so
yeah, absolutely. That's where I live. I understand.
Yeah. So what one of our concerns is that with the 5% cap on rates, we don't know the choices that we're going to be facing in the next month yet. But one of those choices could be to spend an additional $20,000 on recycling between January and May, or do something else. And knowing that we will not be directly accountable for the recycling come May, I venture a guess that it would be a struggle for council in that case to step up with that kind of an expenditure. And I'm guessing that as a number of our communities look at their budgets, and when we're facing that if we had a great budget coming in that we didn't create, that's good. If we had a less than great budget coming in that we didn't create, any one of our communities could be pushing up hard against that cap just to survive, not add services. So we'll be looking, in our community, we will be looking at, do we continue services after January or not? And so that could impact, all I'm saying is that could impact your calculation as well, because there's a significant amount of our area that is served by Faro. In that.
Yeah. Obviously, what your community decides Mr. Chair, is, you know, it's your community's decision. We live in a democracy, and you know, we would request on the commission side, keep us posted what your intent is, so we can manage it as best as we can. Your option, recommended option, would be similar to what we've decided to, the way we've decided to go forward with on collection. Though, if you did decide to continue with your collection, it may make some sense to renew on a month-to-month basis to avoid a service disruption. If you wanted to go that way, again, you know, a 4-month period in your case, boy, I mean, hard to get a competitive bid on that. You're in a relatively unique position as well, I might add, where you're one of the few communities that has really sort of shifted from one regional service commission to another. And then you've got that added complication where some of your former community, you've also expanded at the same time, right? So some of your community has always been serviced by our solid waste division, and some of it was previously going to Southwest Regional Service Commission. So yeah, it's a little more complicated. And again, all I would ask, Mr. Chair, is that you keep us posted on what your intent is, and we'll work with you as well as we can to execute whatever your decision is.
I'm hoping that it's a positive decision, but it doesn't seem to me that we will make a decision to have recycling in one part of our community and not have recycling in the other part.
Yeah.
So, and going to tender for the other, or not even going to tender, going in for bids on the other one, as you say, it's just whatever they ask is what we're gonna be stuck with.
Yes.
All right, thank you very much. Any other questions or comments? Brad? Are we ready for adjournment?
I'll motion that.
Second, sure. Okay, moving second, we adjourn, we're out of business. Thank you.
Thank you.
Thanks, everybody.